Hey guys, welcome back to the channel. In the first few weeks of this year, Tesla's market cap reached $830 billion, to make it the fifth most valuable company in the world and making Elon Musk the richest man on the planet. While Tesla clearly is an absolutely incredible company built on exceptional battery technology, a really cool brand, and a great interface amongst many other things, its stock price recently has become completely untethered with reality. The reason that this is happening is because the stock market is not rational and does not reflect companies' prices efficiently. So to explain what's going on here, in this video, we're going to cover the Tesla stock rise in the last year. We're going to look at some examples from history as to what might happen in the future and reasons why it could plummet in the coming weeks. Now, there are two types of reasons to begin talking about valuing Tesla stock. We're calling them rational and irrational. The rational reasons actually cause the inherent value of the company to rise, so it might be that the general market for electric vehicles is becoming more and more attractive with tax benefits for owning EVs. With bans on conventional cars being announced and generally people are becoming more environmentally aware, there's going to be more demand for electric vehicles. Then looking at Tesla specifically, they are a market leader and they have quite a lot going on. That could be their automation software, which is getting better all the time, and they have loads of other developments such as in solar power or energy storage. And most importantly, this year, they finally posted their first net profit. Then there are the irrational reasons. This might be a stock rise based purely on speculation. This is actually more common to see where someone buys a stock because they think it's going to go up, not because the inherent value of the company rises. So this has happened quite a lot over the past year with loads of more retail investors. Quite frankly, these people haven't had much to do and lots of money they're just putting into the stock market. A lot of these people would have done that in companies that they really love, but they haven't actually put a true value on it. It's well established that people often assign a mental value based largely on the emotional imagery that companies evoke. Tesla was added to the S&P 500 simply because it had grown in size, so it's going to be included on the list of the top 500 companies. What this means is that everyone who invests in index funds or mutual funds is now automatically investing in Tesla. More people are buying it, so the stock price goes up. There are a lot of techniques to analyze and value certain companies. We have gathered from popular data that the Tesla stock price is about double what they're actually worth. So Tesla clearly is overvalued, and it's an incredibly risky investment. People could still make money on it because there's so much speculation, but who knows how much further it's going to go up before it crashes down. Speculation and overvaluation is commonplace in the stock market, and it's happened so many times. In an extreme case, such a bubble happened during the dot-com bubble. It happened in the housing market crash in 2007, and it even happened in the 17th century with tulip mania. Another great example is Yahoo in the beginning of January 2000. Its market capitalization rose to a high of over $110 billion, making it the most valuable company in the world. But at the same time, its net earnings were around $50 million. So the price to earnings ratio was over 2,000. It would mean that it would literally take 2,000 years for its investors to get their investment back based on these earnings. But many people knew that it was crazy and simply made speculative bets and hoped that someone crazier than them was going to buy them off at a higher price. But eventually, this bubble did crash in 2001, and its market cap falling to a low of around $8 billion. Having said that, people don't think something quite as drastic is going to happen with Tesla because according to data, their earnings potential is pretty high. It's just that analysts don't think they can justify the price they're at today. Many people in the community have expressed how much they love Tesla. It's still a great company. However, based on assumptions, it's really overvalued right now. The key message here is just to invest at the right time and avoid bubbles. Analysts don't think Tesla is the only company that's overvalued right now. They think the markets in general are really overpriced. If history has taught us anything, we have learned that volatile stocks such as Tesla tend to amplify whatever is going on in the broader market. They soar when times are good, and they crash much too hard when the business environment tightens up. Take a look at the initial panic from last year's world events. The S&P 500 market index fell 29% in a month. Tesla's stock plunged 61% lower over the same period. Tesla's rebound from that deep well was also dramatic. The stock has gained 750% since that market bottom in March 2020, easily beating the S&P 500's 76% return. Tesla's volatility has been soaring ever since the illness started. CEO Elon Musk is not shying away from Tesla's explosive and unpredictable nature. He often stirs the pot himself by tying Tesla's fortunes to the value of leading cryptocurrency Bitcoin. A steady stream of tweets from Musk has proven effective in changing Bitcoin's prices in the short term. Time will tell if his social media presence will have a permanent effect on the cryptocurrency market. In more concrete terms, Tesla has invested $1.5 billion in Bitcoin tokens. Tesla and Musk have some serious skin in the cryptocurrency game, and that sets the stock up for even more volatility as the Bitcoin market continues to deliver wild swings on a regular basis. Tesla's Bitcoin holdings amount to just 0.2% of the company's current market cap. We would not be surprised to see Tesla's stock taking another deep dive in the next market correction, no matter what the reason for the crash might be. Though it could be plummeting in the coming weeks, people who believe in Tesla will be ready to buy on the dip and watch it experience yet another dramatic bounce. They don't even call it a comeback because the company will never really have gone away. However, since the market that Tesla addresses is growing quickly, Tesla naturally has a strong growth outlook. The company will grow its deliveries by around 60% this year, according to many estimates, and growth will remain very healthy beyond 2021. Tesla's growth outlook isn't bad at all, but it still seems that growth will slow down over the years, and with a 25% expected growth rate in 2023. Tesla isn't an absolute growth monster. Expected growth for some other EV players is significantly higher, including NIO, which is expected to grow by 45% in 2023 according to Y-charts. A high-growth company naturally deserves a higher valuation than a low-growth company, all else equal. This does not mean, however, that every price is justified for a company that grows fast. Those that paid extraordinarily high prices for fast-growing tech companies during the dot-com bubble have seen their investments fall very hard eventually once the bubble burst. And depending on what exact companies they bought, they may still be in the red 20 years later. The same does not have to happen to EV investors, but this is still a story that one should keep in mind before chasing growth at all costs. Investors have different goals and different risk tolerances, so there's no one-size-fits-all decision to make during its price fall. But when looking at the facts, Tesla doesn't seem like an attractive investment to some people at current prices. The company has a solid growth outlook, but it is expected that growth will slow down quite a lot over the next 2 to 3 years. Tesla will still grow faster than legacy auto companies, of course, but does that justify its current valuation? Some big analysts doubt that. When we also consider that competitive pressures will likely rise during the next couple of years, and that there are higher growth EV pure plays trading at lower valuations, Tesla doesn't seem like a great choice at current prices. If you're looking to learn more about business topics like this, stay tuned for our later videos. We'll go into depth on various other topics that we're sure will interest you. Also, don't forget to smash that like button, subscribe to the channel, and hit that notification bell. See you next time.